Is Palantir stock a buy, sell, or a hold? That's the question I'm going to answer in this video, looking at Palantir's near-term and longer-term prospects from the perspective of its financial metrics. So let's jump right in, starting with revenue. And what you could see here is over the last several years, Palantir has done a nice job growing its revenue from over 900 million in the trailing 12-month period in July of 2020 all the way up to 2 billion in its most recent trailing 12-month period. And given that Palantir uses artificial intelligence to make enterprise solutions, enterprise demand for these solutions has been increasing given the rising effectiveness of artificial intelligence. So Palantir's prospects have improved significantly over the last 6 to 12 months. That's helped Palantir improve its operating profit margin, which I have shown in this screen here. You could see how Palantir has used its revenue growth to increase its operating profit margin. It's still negative at 3.22% negative, but it's been increasing with revenue growth, and management has said that in 2023 the company will be profitable in each and every quarter, and it will be profitable for the full year. And so I wouldn't be surprised if in 2 quarters time I look at this metric again and it's positive at that time. However, one concern I have with Palantir's profitability is right now the company's getting a big boost from higher interest rates. How's that so? Well, the company's got nearly $3 billion in cash in its bank accounts right now, right? And so since interest rates have increased, the company can earn 5.5% investing in short-term government bonds, just putting that money they had in the bank in short-term government bonds and earn 5.5%. And so that's generating significant amount of interest income for Palantir. And that income is very lucrative because it all flows to the bottom line. Interest income doesn't have very many costs associated with it. And what I'm concerned about is if the Federal Reserve starts cutting interest rates in 2024, how would Palantir's profitability be impacted then? It's going to depend on how far the Federal Reserve cuts interest rates or if they cut interest rates. And so that's one area of Palantir's business I've been paying close attention to. I want to see the company increase its profitability as a result of increases in operating income, not in increases in interest income, which to Palantir's credit, they have been increasing profitability from operations as well. Okay. The next thing I wanted to look at is free cash flow. And again, Palantir has been doing a good job with revenue growth leading to increases in free cash flow. 375 million in the most recent update, and that's up from negative 250 million around January of 2021. So another demonstration of economies in scale for Palantir, and I often say the company's done a good job controlling costs as its revenues have increased. I also wanted to look at the capital structure. I wanted to look how much debt does Palantir have and what about shareholder dilution. And for debt, no debt, right? You look at the metric up here, zero. Palantir has zero long-term debt and close to $3 billion in cash. So a pristine balance sheet for Palantir. However, it has been diluting shareholders substantially. Around January of 2021 or before, a little before January, Palantir had about 900 million shares outstanding, and that's more than doubled in the last 2 years to 2.27 billion. And this isn't exclusive to Palantir, but Palantir has been diluting shareholders more so than most companies. They use stock-based compensation for their employees, and so that might reduce the cash outflow because stock-based compensation is a non-cash expense, although it does increase the number of shares outstanding. So if or when the company, it's projecting profitability for 2023, but now those profits are going to be split among more shares because there's more shares outstanding. So the earnings per share is going to be lowered because of all the extra shares outstanding. Finally, I wanted to look at valuation, and this is a concern for me as well with Palantir stock. It's trading at a forward price to earnings of 56. That's about as expensive as it's been all year, a little bit down from the peak. And that's my concern when I'm thinking about this company as a buy, hold, or a sell. Because as we saw with its financial metrics, revenue is growing, profitability is growing, cash flow is growing. The company's one of the leading edge providers of AI services, something that enterprises have increased demand. So it's doing really well performance wise, but is that incorporated in the stock price? And I'm going to argue and say yes. So if I was to say buy, sell, or hold, I would say the company is a hold right now because of the valuation. Earlier in the year, I had Palantir stock rated as a screaming buy because the valuation was significantly lower. Around this time when it was trading at a forward PE of around 30, I was ramping and raving about Palantir stock, saying how much investors should go ahead and buy this stock. But after this substantial increase, I said, you know what, the stock is too expensive. It's just gotten too expensive. It's a great company, great performance, but that's already, in my opinion, reflected in the price. And so I would say hold for now if you have it. If you're interested in buying, I would say wait for a better opportunity to jump in a little bit later. All right, but that's it for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.